Well, it's really hard when you can go to a buyer and say, you can buy anything you want through our platform except the largest video sharing site in the world.
And what year was that?
That was in 2015 when Google decided that YouTube would only work with Google products.
So that was 8 years after your founding. And was that prior to, I mean, did that come out of nowhere that YouTube made that decision as far as you were concerned at the time?
Well, at that time, AppNexus was growing almost 100% a year. We were starting to win major deals. WPP, the largest ad agency in the world, had made a major investment in AppNexus. They had chosen us as their primary platform. I think Google was afraid they couldn't compete fairly. And so they made the decision to restrict buying on YouTube to their own products.
And why couldn't they compete fairly in their minds, do you think?
I don't think it was really that rational. I think it was just that we were growing incredibly fast. They didn't have the internal innovation and R&D to keep up.
But why was it a problem for them if you guys are placing ads on their platforms? That sounds great for them. Why did they want to own all of that themselves?
Well, I think you see it with the growth of YouTube advertising going flat. What happened when they turned off third-party tools, they no longer had all of our content filters, for instance. And so you see major advertising starting to boycott YouTube because of content problems like running on jihadi videos.
You think you could have prevented that?
We did prevent that.
Interesting.
So I think it hurt the YouTube business. But if you're a monopolist, you're willing to sacrifice some of your businesses for the larger picture. And if they could put us out of business or restrict the growth of third parties, they could make up the money in YouTube later.
Julia, what were you going to add on that?
Oh, no, I was just going to say, because it's what he's saying now about YouTube and their challenges is really notable here. Now, YouTube has had a number of issues. Just today, they announced they're taking more steps to take offensive and violent and inappropriate content off their platform. But this has been going on for years now. And one thing that we're seeing is there are a lot of these third-party players. Some of them are content companies like Condé Nast that put their content on YouTube and allow people to buy their premium content on YouTube. Others are sort of more in the ad tech business, like what AppNexus used to do. And what they're trying to do is help buyers find appropriate and premium content on YouTube that they can be guaranteed is safe, because YouTube has been plagued with these ad safety issues. So I think it's interesting as we're seeing YouTube try to take control of that market as well, because there is a whole ecosystem that has lived on top of YouTube and on top of Google. And it sounds like what Brian's talking about is the pressure now to really have YouTube and Google control all of that.
So, Brian, what were you guys worth at the peak, by the way, your company?
I think our highest valuation was around $1.8 billion.
And you sold to AT&T for?
1.6.
Okay. So your hope was turn that 1.8 into multiples of that in the public markets instead of having to sell a company.
Right.
Presumably.
Right. And we peaked in valuation around 2015. So,
okay.
We never were able to really grow the business from a valuation perspective, partially because the market said, well, what if Google takes away more things?
Absolutely. So final question, now that we're talking about a regulatory crackdown, what remedies that are being discussed do you think could change this problem as you in that industry sees it with these companies?
Well, one thing is clear is that the antitrust laws would allow the DOJ and FTC to take action. However, for the past 30 years, one of the ideas is that if a acquisition doesn't hurt consumer prices, then it's okay. But the problem is ad-supported businesses like Google and Facebook don't charge consumers, which basically means they have an exception. They can buy anything they want without impacting consumer prices.
So you're in favor of a rewrite, basically, of that law to look at it a little bit differently than just the consumer harm?
Well, it's not a law. It's just the interpretation. So I think if Congress instructs the DOJ and FTC that we need to be more broad in our understanding of consumer harm, then, they will take action, and we will see either breakups or significant consent actions by all four of the companies they're looking at.